All right. Hello again, everybody. Thank you for joining us for another amazing session of Tales from the Pantheon. If you are joining us for the first time, this is basically a podcast that's no BS, straight to the point, learning from the amazing stories, trials and tribulations from some of the amazing community builders, investors, and business owners and business leaders and industry experts from different spaces and sectors across the basically United States. And so today we have my really good friend Evan, and I'm really excited to jump in and talk with him. I had the pleasure of meeting him last year, and I'm happy to have him on today. But before we get into that, really want to tell you guys also about founding Titan, or about Titan AI, our company that is basically putting on this podcast. And so essentially, what we're doing is creating a platform that helps with finding the right connections, opportunities, resources, but not just finding those, maintaining the relationships as well. And so we actually just recently launched our V2. So as you can see here, definitely sign up for our platform directly on titan.ai. And yeah, would love to have you guys jump on and try out some of the features. We've actually got some really interesting and fun integrations that are going to be coming out later this month that I want to tell you guys about. But without further ado, I want to make sure that we introduce our esteemed guest. So let's go ahead and bring on Evan.
Gabriel, thanks for having me.
Yeah, no, thank you for being here. And also, if there is any lag, guys, I apologize. I am out here in North Carolina right now visiting family still. And so if there is any lag, uh, you know, so sometimes we don't need video. All right. But thank you so much for being on, Evan. We actually met during our South by Southwest event that we had for Black founders and investors. And since then, we've, kept in contact. And you're coming down for the next one, I think, too, that we're doing in March as well, right?
Yep, I'll be there from the 12th to the 15th.
Okay, perfect. Well, yeah, let's go ahead and jump right in. Let's hear more about you, your background. Tell the people who you are, Evan.
Yeah, so executive director of a nonprofit organization that works to connect and support and bridge social capital to Black founders, Black and ally founders, working on venture stuff. So rapidly scalable business models, where a typical business that we call a growth business is aiming for 10 to 20% year over year growth. In venture, we're talking about 5 to 20% month over month growth being the target. So this is really the Olympic elite race. And as it stands, we've only got about 18 of about 800 unicorns, or these gold medalists in this race, being founded by the Black diaspora. So Venture Black is working to create all the material conditions necessary in terms of VC relationships, mentorship, understanding of contracts and deal terms, all these sorts of things to get more folks from the Black community represented in the venture landscape. And so my history goes back. So Black History Month, I'll give you a little bit of information from my family. My grandfather actually founded the first Black-owned bank west of the Mississippi,
Oh,
the
wow.
Liberty Bank in the Central District of Seattle in 1968, which was the year MLK was assassinated. So in Seattle at that time, there were a bunch of families that had moved west as a part of either the first or second Great Migration. Really, the Boeing boom was in the 1930s and 40s. And so a lot of Black families came to settle in the Central District, and they were redlined out of getting home loans. So that traditional banking establishment at that time, there was no credit. You just kind of showed up in your Sunday best, and if they liked what you did and who you were, then they gave you the loan. But of course, if you're last to get hired, first to get fired at Boeing, they're gonna treat you one way, and then another way if they've redlined your district. And so this redlining practice was really to try to stabilize the banking infrastructure after the big 1929 stock crash, and try to revitalize. And so that's the spirit in which I now work to coordinate investment into Black founders, because as a long-term effect of that redlining, Black family home ownership has been low. It's actually been what black or white family home ownership was during the Great Depression. So we've had this kind of sustained economic depression, but without the ability to get home equity, without the ability to invest in privately held companies, because a lot of the criteria for being able to invest in those privately held companies, to be an accredited investor, you have to have $1 million net worth or annual income, $200,000 a year if you're single, $300,000 a year if you're a married couple. So you have to meet those income requirements to be able to invest in privately held companies that aren't registered with the SEC. So at the same time as Black people being redlined out of home ownership in the 1930s, 40s, 50s, all the way really up until the 80s, you were also getting redlined out of investing in building companies that your community could grow off of. So, this cycle of underinvestment in Black communities leads to this idea of I've got to get out, right, when you succeed, or I'm going to move to the good part of town near the tech campus. Well, that could have been a Black community, right? And so we see neighborhoods like Tulsa working to make that their reality. We see even globally places like Nairobi, Kenya, Kigali, Rwanda building that out too as their future. And so Venture Black is, in my work towards creating that, is to really right this wrong and create more diversity in the business landscape at the highest levels, which I think all people can relate to being necessary at this point.
Yeah, and definitely included the link for Venture Black's website as well, because I think it's really important for pretty much all of the things that you've said. My parents also were, very big in, the Black community, as well as my grandparents, and trying to basically, have a lot more influence and buying power and things like that, and being able to start a lot of these, really important Black organizations, because I don't think a lot of people talk about the numbers as much. I know when I was little, my dad used to actually every Black History Month, and also even outside of Black History Month, we'd have to like write a report to get our allowance. Like we would have to get like $10 or whatever it is. So like I wrote, stuff on like, of course, the typical ones like MLK, George Washington Carver, all the stuff, man. And so it's important to know that history, to also know about the context. I think that we see, in especially these environments, and the work that I know both of us do in order to really drive the statistics up in terms of the wealth gap that's been experienced for a lot of Black individuals, especially when it comes to venture capital investing. So everybody always thinks, oh, well, aren't there as many Black angels? Well, you kind of just explain the entire process. You have to be a certain threshold just to even be considered an accredited investor. And I don't think a lot of people even know what that process truly entails, especially for a lot of first-time founders or first-time investors as well.
Yeah, they don't mail you a merit badge. The SEC doesn't go out of their way to let people know that they can perform this vital economic function. There are big tax incentives to do this. So you can deduct your losses on companies that you write off that fall out of your portfolio in certain cases. And then also you can deduct up to $15 million of capital gains if you hold a qualified small business stock for up to 10 years, or sorry, up to 5 years, not even that long. So, there's all these reasons to perform this vital economic activity, but, very little marketing done around how to do it. And so one of the, knock-on effects of this is only 1% of angel investors are Black. Only 3% of managing partners at VC firms are Black. And so when you want to go found your VC firm, the LPs, limited partners that are the investors in VC funds, they want to know what your deal history is. So if you're not out there making angel investments, then you don't look like a great candidate next to, the person that has, or the person that's spinning out of a VC fund, being on the, analyst side, or, being a venture partner or something like that. They're an established industry. Yeah. So it's a huge gap. It's a huge gap. And, it's really going to take a lot of advocacy and intention to fix it.
Yeah, I think one of the biggest things that you just hit the nail on the head for is the fact that, like, this isn't just something that also affects the Black community. Like, when you look at angel investors in general, or even just investors too, like LPs, GPs, the entire gambit, it's very difficult when you don't necessarily have didn't have the access or resources, especially in your earlier career, and people look for that track record. Like I know a lot of people actually starting, investment funds, as well as, I mean, not just on the VC side. Like I know people that are, trying to start things in private equity, and things of that nature, or even their own family offices. And, if you don't have a previous track record for certain aspects, it can be very, very difficult to rally or bring other people on board. And it doesn't mean that you're not capable, but it's just like, okay, putting you on paper versus somebody else on paper right next to each other, and you kind of look at the two, it's like, oh, well, this guy's done, 35 investments. Well, also, they have had that wealth for a lot longer, and it's a lot more prominent generational wealth. I think that we as a Black community are trying so hard to build, but it's an uphill battle for a lot of those things. But we're making progress, just trying to make it a little bit faster than we typically have in the past.
Yeah. And we've seen, precedent for being able to bridge the gap. So women back in 2020 were, I think, 3% of angel investors and 5% of angel investment recipients. And then fast forward to 2020, and women are, 47% of angel investors and 31% of angel investment recipients. So over two decades, able to bridge the gap on angel investment. But then angel investor syndicates, I should say, right? Typically about $250,000 checks. That's about the average amount. Those don't lead rounds. Like typical pre-seed stage round will be anywhere between 400K up to like 5 million in certain industry sectors. So it's you need people that are going to be lead investors, set the terms. Oftentimes this is a precondition for other investors following. And so, angel investors aren't necessarily going to get that done. And so for women, one of the banes has been not enough venture capital firms. So these write those, $400,000, $1 million checks to really lead these pre-seed rounds. They perform all the legal work to do the deal, the deal document creation, the contracting. And so women at 4% of investment recipients from the VC side is really kind of stagnating them as well. But even with the angel investor growth, so I think all the way up until 2018, women only had, 18 Black founded unicorns. These are companies that have raised venture capital that are valued at $1 billion or more. They only had 18 of those, and that's 50% of the population. I think at that time probably there were maybe 600 unicorns in the country, right? So there's about 800 now. But women then have gone on to, in 2020, by 2021, have 124 women-founded unicorns. So in that time frame, right, you see how building that early stage investment funnel through the angel investment, creates these unicorns, which then will create women VCs, right? The people that make it big from investing in the early rounds, ostensibly, women investors, but not, entirely women investors. But oftentimes there's kind of like this homophily, people from your same group, right? You have a better understanding of kind of like what their ambitions are and, what they're up against. And so you can see kind of a better understanding of their relative position and their investability. So, but I think that, those things will be coming into fruition, and really building that strong undergirding and the pre-seed is really how to knock it out of the park. Right now, for Black founders, they only receive 0.4% of pre-seed stage investment, which you're not going to convince somebody that's out there making $400,000 a year as a data scientist to, step off that cliff into potentially nothing. So you get, people that don't matriculate from, being innovators working at, logo companies, and to being, business owners of their own IP and reaching market to achieve those larger incomes.
No, I think it's really interesting, the gaps that have been filled in some of these areas, but also some of the gaps that are trending a little bit downwards, especially as we see, I guess, some of the backlash, because we keep it straight up on this podcast, right? Like there has been a lot of diversity backlash, especially when it comes to even funding a lot of some of the underrepresented groups, specifically, I think women, people of color, for a lot of different demographics. There are a lot of organizations that used to have Black entrepreneurship programs. Then you see what happened with the Fearless Fund and everything else. And then a lot of those programs just kind of disappeared silently into the night and have not been brought back. Because it's Black History Month again. Usually they also all, their applications open in February or close in February. And we have not seen either side of the majority of those things. So the numbers trending downwards, for, especially investing in a lot of underrepresented groups, not even just Black entrepreneurs. I mean, it makes a lot more sense, especially a lot of the other statistics and information that you've kind of provided to um, basically, kind of set the stage for what this environment is like. But
That
okay,
being said, though, we can unlock relational sources of capital, right? So, teaching those people that are credit investors that they can perform this economic function and get us out of this gatekeeping scenario where people who are, pre-capitulating to chaotic forces out there, let's just say that, right? We can get around these people by effectively organizing and pooling capital in ways that involve contracts, or not like, not to, throw shade or anything like that, but these like SUSU models, or more ones that require like a higher level of trust in your community or family, support system. So we can do this with contracts and very, easily create pools of money that can be invested in, ventures, understanding the nature of that asset class. And there are other, potential investments too. So like, venture is one, scalable model. There's multifamily commercial investment, being able to, pool capital into building those creates wealth that can be used to build high speed ventures. Also, entertainment, like we own a large market share of arts and culture, right? And building systems that can fund that model and retain ownership within the, creator economy. These are all ways to gain economic strength and leverage, relational sources of capital to, get large capital projects done that can then, create a virtuous cycle of, building, exiting, and then reinvesting. So
that brings me to one of my next questions here, which is really about like the philosophy behind access, right? So when you think about this, how do you think about access in venture capital beyond the actual capital itself? So, the networks, the trust, the opportunities, like how are those points viewed for basically angel investors, as well as being viewed for the VC side as well?
I think one thing I think America is quickly becoming aware of is that people are living in bubbles, like their information is being more catered to them specifically. But there's been a long-standing bubble of there's no Black people in your family photos, right? So your social distance to Black people, to where you'll have a continuous relationship upon which to build the trust necessary to consider maybe a large dollar value angel investment to help them get their venture off the ground, right? That's less likely to happen just due to this kind of social gap, right, between on the color line. So I think that that aspect has really held people back, because what's happening is the white capital infrastructure is growing, and they have certain conditions and expectations. So when they see a Black founder come up and they're like, hey, your friends and family round was like 25K or whatever, like, why would we invest in you if your own family and friends don't believe in you? They're looking at a different reality, which is the 1 to 8 net worth gap of Black families to white families in the US. So they're perceiving this huge socioeconomic asymmetry as a character flaw, or a deficit in the innovation of the founder, and it's not accurate. That bubble has kept them from an accurate perception of the situation. And the other is a lot of people just aren't quite prepared for venture. Venture is a very opaque industry outside of Silicon Valley, and people that are building these companies may be excellent product developers, maybe brilliant marketers and operations people, but they don't understand how to comprise a venture deal. They don't understand what an appropriate valuation cap is. They don't know how much they should pay their first employees, how much they should pay advisors in terms of equity, so they can show up looking a little raggedy, right? And so unless you're investing in improving the quality of founders, then those people start to feel a certain way, because one, you're just telling them they're too early. You're not investing anymore in telling them why they're too early, or what ready looks like. And so that information asymmetry can lead to people understanding it as maybe something that's or has a racial component to it. And so there are all these different dimensions where people are talking past each other's industry. And then there's also kind of this herd mentality. So it's like a good friend of mine says Black VCs oftentimes are like Black cops, where it's like they're adopting the values of the predominant culture with respect to the industry that isn't seeing things clearly because of that distance that I was speaking about earlier. And because of that, they're equally not investing in Black founders. So the infrastructure that could be, helping build more representative business landscape and more, healthy and thriving Black communities, gets co-opted by, people adopting values that look more towards their individual success as opposed to a larger success scenario for their family and neighborhoods. So, bridging that in terms of, getting people off the herd mentality, which can come from just, creating more representation in the sector so that people, aren't looking to, aren't particularly dependent on the values of the existing infrastructure, can be important as well. But then also, just creating, not necessarily, safety nets to say it outright, but it's like creating ways by which people can use their courage more, I think is important.
Yeah, and I think there's something to be said about when we're looking at some of these deals. Like, I've talked to a lot of Black investors as well. I think we scrutinize Black founders a lot more because of the lens that we are under as funders sometimes. And it should be not that it should be, but it is the opposite for, basically white men, right? Like, not a lot of people that like they get the pass because they're like, oh, okay, I trust you. Like, it sounds good. Like, and when you talk about the statistics as well, I think there's also the aspect of, um, you know, going to the same schools, having the same opportunities. Like 33% of investment actually goes to people that went to the same school as the investor, right? Which is a crazy statistic that, like, I don't think we talk enough about. Like, it's just that's a luck of the draw thing, or it's you don't really have any control over something like that. For like, okay, I went to this university, it's 5 to 10 years later, I've started my first company and I'm trying to get an investor in. I can't go back in time and go to Harvard or go to Stanford or wherever else that your target investors live or went, or any of those things. And so those are some of the hurdles that I think are not talked about enough during these conversations. And the things of like, okay, how do we overcome those? Which kind of goes into my next point of what you're doing with with Dreamward as well as Venture Black. And also, I mean, you started the Washington State Black Angel Network as well, right? So you have a lot of these organizations that you are using to be the opposite of this, of actually fueling the innovation, fueling the path forward. So what motivated you outside of some of the things that I guess we've talked about? Like, is there any additional aspects that motivated you specifically to jump into venture yourself, and then also to basically bring these three organizations that you've started into the fold?
Yeah, I think for me, like, at heart, so I started off as a computer and electrical engineer, worked 20 years in the industry. After George Floyd, came to go work for Africatown Community Land Trust, which is a nonprofit built to support the thriving of the Black diaspora through land ownership, in places where there's been high displacement in Black Seattle. And from that, I learned, okay, well, a lot of folks are compressed at the lower end of the socioeconomic spectrum, even in Seattle, where, we've had unparalleled growth in the tech sector for really the last, 40, 50 years, as long as I've been alive. And we've yet to produce a Black founded unicorn from this region, which is mysterious to me. And now, especially when, all the Black diaspora comes from all over the world to go work at Amazon, Microsoft, Tableau, which is Salesforce thing now, what is it going to be? Square, all these different big tech companies that we have here. Those folks are not matriculating out to become business owners, right? And they're not doing it because the investment isn't there. And so I was just looking at all this and I'm like, this is absurd, right? You don't build bad systems as an engineer, or you try your best not to, right? There's a certain quality. That's the expectation, because people's lives are on the line, and very much people's, economic and community economic lives are on the line when you're, under investing in brilliant people. And when they're all locked up generating IP for, people that already have, we say, tens of generational wealth, so that's what motivated me, was just really seeing that gap where it's like the market is being irrational. I've been to, I won't name names, but I've been to large venture development organizations that are aimed at developing new VCs. And when I mentioned that I was investing, specifically in underrepresented founders and, predominantly founders from Black diaspora, they're like, oh, see, that's impact investing. And I was like, oh, how so, good sir? right? And they're just out here assuming that Black people are only founding candles and incense companies in the year of our Lord 2024, 2025. It's
Yeah.
like, that's their perception of us. And so
Yeah.
it's like, all of that just motivated me to make sure that those bets were being made, because underrepresented founders outperform. And it's been shown that white founders can raise on hype, and their ability to raise has no correlation to whether they'll deliver a return on investment to their investors, because, like you say, that scrutiny isn't being applied. And I saw this when we saw the FTX collapse, right, for the cryptocurrency. It's like, so, you're telling me that you're out here doing discounted cash flow analysis, that you're out here really, looking at the unit economics of these companies. But it's like, there was too much handshaking to make that possible. Same thing with Theranos, right? Those
Yeah.
all relationship-based capital fund raising, right? And it's all just, raising on hype. And then what is it? It's whispers and dust and nothing. It's vaporware, right? But Black
Yeah.
founders have a certain standard, right? So we know that, like Chris Rock said it best, it's like, I'm a, multi, $1 million entertainer that's traveled the world and done this. My neighbor's a white dentist, you know what I mean? So it's like, we have a much higher bar. And I think that, with that cultural insight, right? It's like, you would invest in people with that much higher bar, where it's been shown that, your ability to fundraise correlates with your ability to deliver an ROI. And for me, that's a safer bet than, the hype train, and I think that, Hustle Fund's slogan, great founders look like everyone. And I think that hasn't been capitalized by investors. And I think that's a huge opportunity. We saw investors, put money in during George Floyd, right? Underrepresented founders, or Black founders specifically, got up to 6% of early stage investment. And it's like, we're seeing all the gains from that in terms of the VC funds that have built out of that, all the exits, all the unicorns that have been made, in modern times. And it's like, what if we just kept doing that? It's like, there's too much money being left on the table. And I think that, if we, like, I want to see stronger communities develop through, philanthropy. We had the legacy of, Paul Allen out here, building Microsoft, and, he invested heavily in public works. And it's like, this happens in cities across the globe. I think, what is it? Walmart is out there in like Bentonville, Arkansas, something like this, right? And it's like, there wouldn't be nothing like that in Bentonville if you didn't have somebody go out there build major industry, right? And so I think that a good way to say it is, you give a man to fish eats for a day, you teach a man to fish eats for his life. But who owns the pond, right? And so it's getting to that level of ownership and appreciating of what ownership means to communities. That all inspired me. So, long answer to a short question.
No, I mean, that's a amazing response to that. And I mean, there's a lot of parallels to what you've said versus what I've seen in my own career, and trying to jump into venture and everything else as well. But one of the biggest things is, I think a lot of people would love to know how your approach differs for the Dreamward side as well as the Venture Black side, for like both of these organizations, in the approach of supporting the founders in the with Dreamward, and supporting the investors themselves with Venture Black.
Yeah. So Venture Black is a nonprofit organization, tax exempt 501c3, that really runs our angel investor network, formerly known as the Washington State Black Angel Network. We rolled that curriculum under there, which was an angel investor accelerator curriculum. And then each angel invests separately into an SPV that gets the pro rata share back. And these, are all accredited investors. That strategy is to get early stage capital specifically into Black founders. And so with that in mind, so the typical angel investor syndicate invests about 250K, but that's not going to be leading rounds. And we're headquartered in Seattle, where there's a bit of a crisis of folks leading early stage rounds. We're in close proximity to the Bay Area, where early stage capital is a commodity. So people are like, you'll go down there, you'll de-risk with their money, then you'll come back to me with a sure thing, right? And so that results in Seattle being very capital efficient in terms of ROI per dollar put out. But it results in an ecosystem where people don't feel well supported. And it's like, why would I stay in Seattle? Why would I build in Seattle if the people that believed in me were down south? So I think that what am I trying to say? So for Venture Black, really, we're focused on building community, building the investor community, building the founder community, with the understanding that they should be building together and should be building locally in the Pacific Northwest. Venture Black is something that we're building as a model of unlocking relational capital and of getting the Black diaspora together in terms of kind of a professional association around venture as an industry. So that's the model that Venture Black is meant to support. And so with that 250K check, that's not going to lead rounds, and that crisis of leading these early stage rounds, it's to solve that. But then, or sorry, it's not to solve that. It's just to get capital in.
Yeah.
Dreamward Ventures, however, is set up to lead rounds. So in our first prototype fund, we're just a little $5 million fund. We raised it up from $3 million. We are investing in underrepresented founders, which is a little bit of a broader thesis, but we expect a lot of our deal flow to come specifically from the Black diaspora, and then we're specifically looking to lead those rounds so that people, are thinking that they can build in community where people believe in them and are investing in them.
That's amazing. And also, I know you guys have a conference that's coming up as well, right? For Venture Black, if you want to give some more details on that as well.
Yeah, so these are our quarterly venture conferences. We do them to work towards building a high trust environment where people are getting a movie of the different founders that they encounter in that environment instead of individual snapshots, so that people can, work towards building the relationships that are necessary to do those high value capital transactions, or for employment, or whatever of the transactions that go along the edges of a social graph in a community. And so these quarterly venture conferences are meant to be a continuous touch point through the year. At the first and last quarterly venture conference of each year, we'll have the demo day for our Angel Investor Accelerator program, which is an 8-week program which teaches angel investors, these are accredited investors, how to invest in privately held Black founded companies through actual hands-on investment. So we teach about deal making, we teach about portfolio construction, we teach about investor thesis, we teach about what is necessary really to become an investor in this asset class. And then we have our demo day where we'll do the final vote in the investment. A lot of fanfare. In addition to keynote speech, we'll have a keynote speech by an M&A advisor who runs an advisory firm out here, and then also is a founder in the EV charging sector. We'll have a venture panel where we'll be talking about what resources are out there for Black founders, along the lines of startup law, anything that's sector specific, accounting services, research services, different things like that. And when do founders need them? And what sorts of services do they provide other than the thing that's just on the label? So we'll be talking about that, having the pitch competition that will result, the final pitch competition for the Dreamward Event Fund 3, which will result in the angel investors making a between $50,000 to $100,000 investment together collaboratively via an SPV deal. And then, it's just there'll also be an exposition of people showing off their startup so people can see what the work looks like.
No, that's amazing, and I'm definitely excited for it as well. And I think we all in the Black entrepreneurship community appreciate the level of efforts and the quality of the things that you're putting on, because it's extremely needed. Like, I know for even when we did the South by event, right, when everybody kind of came together, and it's like, I know you heard it as much as I did, like, oh, we're so happy this is here, because there really wasn't anything that was available other than what was put on. And I think when we're talking about community and getting a lot of folks together to kind of keep these things going, putting fuel on the fire, it's providing that support to organizations like yours. But also more people starting these organizations and more people getting involved in these communities, and also collaborating with each other. Kind of even like what you've done with the Angel Group and now Venture Black, and kind of putting them both together to create a wider net for fueling basically the same or a similar cause, right? And I think that a lot of people also discount how much time and effort goes into something like that too, because it's very difficult to not only build a community but maintain a community, right? And I think that you guys have done a really good job of that.
Yeah, and I want to shout out, some other really important communities out there. Camelback Ventures doing it big, and then also Black VC, which is the biggest professional network for Black venture capitalists. I just think it's so amazing the work they've done. One of the stats that they released was that now there are more graduates of their Black VC, Black Venture Institute program, than there were Black venture capitalists at the time that they founded their organization. So it's like building these on ramps, making this industry less opaque. Big shout out to all those companies that are out there making that possible for people. Got to build infrastructure.
No, 100%. And I mean, also speaking of other, Black investors and things that I think we're both rooting for is like Fictive Ventures as well. What Khadijah's doing over there, as well as even a group that we're working with closely, actually Dream Block or Dream Wealth Camp, because they are putting together a lot of things. They actually worked with Camelback last year when they put on the summit during South by, and Camelback actually helped sponsor, I believe, the tail end of their happy hour and stuff like that too. So I mean, that's just talking about the collaboration aspect, right? Like, putting on summits for turning these founders into funders and all these amazing things. And I mean, the list goes on too, right? I mean, there's a lot of different organizations that are trying to do some of these things. I think that, or even like DivInc out in Austin, Houston, right? Like putting together things for underrepresented founders. But I think when we're talking about a lot of these organizations, I think that, and not that I think, I know that there are a lot of LPs or other individuals that are like, all right, cool, I've got my token black fund, or I've got my one in, right? And it's like, you guys can invest in and do more with it, because also, I mean, the black dollar is insane, right? We've seen the numbers and the statistics around, even back in the day with Black Wall Street, and like what has been done now with the buying power of black individuals and swaying, how the market kind of adapts or changes, right? And so putting that into these new companies, I think, is something that's extremely important. So we can have more of the Calendlys of the world and stuff like that to continue to thrive and create innovation.
Yeah, and if you're not an accredited investor, and you really want to get involved in this asset class, there's ways that you can crowdfund, gather equity from companies. So WeFunder is one. I think it's a We Build Black, I think, is another one that's a funder campaign specifically oriented to Black diaspora. I think it's out in Atlanta.
Yeah.
And there's a lot of different platforms like this that are for equity. You'll get like slightly worse deal terms, but nonetheless, it's a good way to get exposure to this asset class. Like kind of a personal theory of mine is just like, we see a lot of craziness in terms of like, currency inflation. We see a lot of craziness in terms of the government buying, public equity. And so I think, these are asset bubbles, when somebody, starts putting their foot on the scale there. So this kind of asset class of privately held companies, I think this is something that might maintain value compared to other asset classes. So this is also kind of one of my personal philosophies.
That's a really good point, and it kind of segues a little bit into the next question as well, of like, when founders and investors, because both sides raise capital, really, when you think about it. So when people are raising capital today, what advice would you give around building relational capital? So not just the financial side of it, but building that actual relationship equity as well.
Yeah, I would say have an ask, right? Be defined in your ask, make the ask. And if people are like, yeah, don't get greedy and say, and this and that, right? So put it out there. I'd say have a funnel to go, right? Be able to, set your investors up, know what they invest in. You want a quick no, and you want a quick yes, ideally, but like not like a slow no. Slow no's are death, right? So you want to be able to get all your investors in a typical, CRM, go through, correspond with them, set up their offer, find where they're at, have touch points. The other thing is look for a connector, and a good connector is one of the companies that they've already invested in. Right, reach out to those companies they've already invested in and say, hey, you've already got the investment, and I was wondering if maybe you could make a personal investment, or not a personal investment, but a personal warm introduction to your investor, to see if maybe this would be something they're interested in. And just all these different ways, because I think that one thing that happens is people go out and talk to investors that don't invest in their sector, that don't have their thesis doesn't encompass that founder's startup, and so what you got to do is do a little bit of research on these VC firms ahead of time to know what the typical check size is, what their profile is, and really get to know them on a personal level. Another aspect of this is VCs are not just there for money, right? They have companies they've invested in. Those companies have customers. So you might find your first customer through a VC. You might get introduction to other VCs that are not. If one investor says you're not ready or you're not in their thesis, you might ask them if they, have an investor friend that might be. So there's all these things that aren't really on the label that's on the door that these people provide. Just remember that they're in your industry as well, and that they get a lot of social capital from syndicating deals out amongst their networks. Another thing is have an investor newsletter. So one of the things that people key in on is whether or not you're an investment target or not is how fast you're growing. So I mentioned the scaling target is 20% month over month growth. That indicates a company that's doing really well, and that's even conservative. Like for the really big hot deals that VCs are competing for, it's like they're seeing like 500% month over month growth kind of things. So like these insanely fast growing companies, and so what you want to do is let people know your growth passively if you can through circulating one of these newsletters that says, hey, we just brought on our first employee, we just brought on our CTO for we just finished our MVP or this important part of the MVP that we think customers will enjoy. Another aspect of this is know your milestones. So one fundraise, what are all of the steps you're going to do to get to the next fundraise, and get that in tight. Get a pro forma together, do your spreadsheeting, do your unit economics. And this all is predicated on you knowing a certain thing about your customer. Know as much about your customer as possible before you spend money going after them. And so do your customer discovery. People, are strongly inclined to just see if they build it, if people will come. But I think the thing that differentiates a project from a business is a customer's willingness to buy. And you can go out there and figure that out using lean canvas methodology and customer discovery. Shout out to Innovation Within, which does this generative AI lean canvas, which lets you really build a business model in a one-shot diagram, build hypotheses about who you think your customer segment is, what you think what their problem is, what you think your key value proposition is, what you think is your key differentiator from your competitors. Lets you create assumptions about that, and then through quickly going through and coding customer interviews, validate or invalidate those assumptions. So generates all the work of generating the questions that you might ask customers. It'll do the whole lean canvas for you if you let it. But you got to go out there and talk to those customers. And I think Innovation Within is a good way. I'm not getting paid to say this. I think it's just good to spend, be efficient in this, right? But it's a good way to get the information on what people are willing to pay for. And this is to say, if you're building something that's a vitamin product, people are not going to turn around their car. Well, most people are not going to turn around their car to take their morning vitamins if they forget, right? But if they've got a migraine headache, they're really going to turn around their car to go get their painkiller, right? To go get their aspirin or morphine, whatever the thing is they use, right? And so it's like you want to build that aspirin. You don't want to build that vitamin, right? So through customer discovery, you can figure out what people are really wanting, and then tailor either your product or features within your product to address that market need and get paid.
No, that's an amazing source. That's actually something I'm going to look at myself to provide to a lot of the founders over at the programs that I manage as well. So definitely appreciate that resource, and I'm going to look more into it. And also, you sent me another resource recently that was really good for what is it called, for bug beta testing or bug testing.
Too, yeah. AI QA. Yeah.
No, that's no. You're always really generous with providing some of those additional resources for folks. I think in terms of angel investors specifically, we've talked about angel groups and syndication because those are easier to find. But how should founders go about finding individuals that are basically independent angels? Like, how do those conversations even get started? And where are the best places for individuals to really look to, get their projects funded?
Yeah, your ecosystem will have events. Look at, where those events are held. Sometimes there's concentration. So like in Seattle, we have AI House, which is an incubator based off of the Paul Allen Institute. for AI. And so at the AI House, they have an incubator accelerator. They have community gatherings that are doing like hackathons, all sorts of workshops. They've got core sponsorships with Lovable, with these different companies that are leading the AI game right now and generative stuff. So go to those places where people are gathering, because that's where you'll find people, especially in your sector. If you have venture events in your sector, go to those industry specific events, and you'll meet these angel investors, and especially the parties, right? So the holiday parties, these sorts of things, right? Because these are great opportunities to get to know people on a personal level. And I think so much of that is where these deals get done too, and then the math that they do afterwards is just justifying the decision when they found you and liked you. So I think that really engaging with people at events is a good way for them to get to know the whole person in front of them, as opposed to kind of like the singular agendas that can be carried out over Zoom calls and different things like that. And every ecosystem has them, because just like you need capital, like professional investors need deal flow. So it's not like you're imposing on them. You're actually making their day easier by going out to them and by, creating things like investor newsletters that keep them up to date and things like that, so that they don't have to search or remember to call you or different things like that.
No, that's amazing advice. One of the things that I want to slide into, because you also only have a little bit of time left. Also, if anybody has any questions that you want to put inside of the chat, definitely put those in there. If there's a really good one, we're going to hit into QA, but if not, we've got some other questions we'll still roll with here. So what I do want to roll into, though, is our super fun and spiffy lightning round. So essentially what this is some rapid fire questions that we're going to be asking. We do this in every single episode of Tales from the Pantheon, where we can give you guys some quick and tangible information to use in your entrepreneurial or other endeavors, depending on what it is, right? So you ready, Evan?
Yeah, let's do it.
All right, cool. So what is your favorite book or resource that you recommend to founders? And then what's your favorite one for investors?
Yeah, Lean Startup by Eric Rice tells you really how to do the work of building a company before you pay to build the company, and I think that's so important. Teaches you how to run the company effectively and capital efficient. And then for investors, Venture Deals is a really important one. And then what is it? The Secrets of Sand Hill Road. That's another one that I like to recommend by Scott Kapor.
I need to actually read The Secrets of Sand Hill Road. I haven't read that one yet, but what is it called? The next question is, what's one trait you see often in founders who really break through the noise early?
Yeah, I think founders that show speed, that's it. Folks that sit around and plan, and people that overbuild features, those people don't make it. I think if you're not slightly embarrassed by your minimum viable product that you launch out to market, you've waited too long to put it out there. Michael Sebo says that, and it's true. So that's what I look for, is speed.
Nice. And then what's one mistake that early stage founders make when they're approaching investors?
Yeah, one mistake that they make when they're approaching investors is not knowing anything about the investors. Like, they're just like, oh, money, right? Not knowing, if their thing is within their thesis. And I think, save yourself a bunch of time, set the expectation at the beginning of the conversation, say, hey, look, we're looking for this much money. This is, what our numbers look like. We're this much ARR or whatever in terms of traction. Is that something you invest in? If they say no, then, wrap it up with the potential follow-on, get them signed on to your investor newsletter and keep it pushing. Just, work through that funnel as fast as you can, because you'll get a quick yes, right? So get that quick no, get that quick yes.
Nice. And then what's one signal that makes you lean in immediately as an investor or ecosystem builder outside of speed, like you said?
Yeah, I think founder market fit is interesting. The other day I met a founder that's working on a really interesting thing to make snail mail. That derogatory term, she's second generation post office worker. She says, going to move that over to digital. And I think that for me, that founder market fit is important. Like, why are you an industry expert? Why are you someone that knows a lot about this problem? And then the other aspect is you knowing more about your customer. And that's really what I think I'm getting at by this founder market fit is, if you can tell me concretely that you know things about your about your customer through customer discovery, like we've talked to 50 people, 25 or 30 of them have said this, right? So we know there's a market there, give me some money to go after the market. far more compelling thing than telling me we think that there's this market, or I personally have had this problem, and so I'm inferring that other people have this problem. It's like, you tell me what you know. Like, don't tell me what you don't know or what you're out there looking to explore. Tell me what you know and how you're going to capitalize that, and what you've done so far without my resources to do it. Because then I can credibly believe that you are going to do the thing that you need to do.
Nice. What's one thing the startup ecosystem talks too much about, and one thing that it doesn't talk enough about?
Yeah, I think in my ecosystem, so like I've got, certain glasses that are colored like this way, but I think this applies to a lot of ecosystems, is people talking about, investors, not showing up, and when they do show up, being risk averse and things like that. Well, one, it's like, so what have you done to develop the talent of your founder community, right? So I live in this place where, we're the most tech talent dense region of the country, the Pacific Northwest, right? So, capital isn't a commodity here. And so it's like, why? When we have all this tech talent, right? We're talking about, AI models, like we're number 2 AI hub in the country, I think number 1 cloud hub in the country. And it's just like, so what, but nonetheless, we have a commission on film in our government. We have commission on music in our government. Don't have a commission on startups, right? There's no persistent institutional memory in my ecosystem that intentionally stewards the venture ecosystem. So it's like, we're relying on, people that already have day jobs to keep this ecosystem together. And it's like, those people oftentimes are, doing it for free and showing up for community in that way. And it's just like, why don't you subsidize this? Like, why is it that you'll spend millions of dollars in, certain other categories, but you won't spend millions of dollars to, develop more tax revenue through these startups, which are the greatest employers, right? I mean, greatest net employers, right? They hire more people than they fire, where, we see these vast layoffs from, the corporate tech landscape that's already established. So it's like, invest in the winners of, 2026. Stop, trying to just, siphon tax money off of the winners of the 2020s or 2010s or whatever.
And what's last question here? What's one piece of advice you'd give your younger self entering into venture and community work?
Yeah, I'd say start earlier. I mean, I didn't know enough about the industry, being just a product developer, but I'm just about the same age as Mark Zuckerberg. And it's like, what he knew that I didn't know was that I could be building a company while I was going to school. Like, just having that insight, but then also having the connection to, okay, well, once I build a company, who can fund it, right? So having the benefit of exposure to those sorts of networks is useful. So I would say, one, you have to have exposure. And I think that that was just the insight that I, needed for myself. And I think that's the insight that I hope to give to other people.
That's great. And no, thank you so much for coming on. I want to give a quick shout out and highlight again to basically how everybody can connect with you. Definitely here's your LinkedIn and QR code here. I don't know if you have any additional final words or information that you'd like to say, and then I'll show some of the other links as well for a final time in case people missed them.
Yeah, if you happen to be in Seattle in March, March 28th specifically, which is a Saturday, come on over to the University of Washington Foster School of Business, where we'll be hosting our Q1 Venture Conference in Anthony's Forum there. You'll meet a lot of folks from our ecosystem, meet a lot of talented founders. And if you don't have availability, but you want to support this important work, please do donate at the link below. That's our Give Better account, where we'll take donations towards producing the Q1 event. And we really appreciate everybody tapping in who can tip in, because we hope to scale to your ecosystems.
Perfect. And make sure that we show the link one more time for Dreamward Ventures here for everybody. If you want to give a quick 1-sentence highlight again on what Dreamward Ventures is.
Yeah, so Dreamward Ventures is an early stage fund that invests in founders with strong founder market fit and who have deep technical backgrounds. So this is founders of all underrepresented backgrounds. That's veterans, that's LGBTQ, that's folks of color, women, everybody that is not pale male Yale, that already has a lot of advantages going for them. There's existing pipelines for that, not so many for people that don't have those sorts of characteristics. So we're fun for those folks, and we really want to make sure that these early stage ventures get off the ground.
Perfect. And then really quick for everybody out there for Venture Black as well.
Yeah, Venture Black is a nonprofit 501c3 organization that works to support, bridge social capital, connect Black venture founders, service providers, and funders. We're building community and a model for unlocking relational capital through our angel network, to invest in early stage founders from the Black diaspora and allies. And we appreciate any support that you want to give towards that effort.
Perfect. And then also for the last but not least on that front, the Washington State Black Angel Network.
Washington State Black Angel Network. So we rolled this into Venture Black to make sure that we were growing our angel community along with our founder community. And so this now has the manifestation of the Dreamward Event Fund, which we'll be running the third iteration of here coming up in February, or pretty soon.
Amazing. And before we go here, want to make sure that we also highlight our amazing platform, Titan AI. So we officially launched RV2. I actually have my co-founder Brandy here on the screen as well. We are making sure that essentially it's easier for you guys to network, right? And find all of these amazing angel investors, relationships, customers, all of those things, and being able to not just find those relationships, but also maintain them in an easier and more streamlined manner. And so not just that, also being able to manage your enterprises and your communities. So the community management and event management side for all of those aspects, really to help you guys build out your networks and continue to do what you do best, right? So definitely sign up for our website, or sign up on our website at titen.ai. I'm saying it out loud and spelling it for those of y'all that are listening on Spotify later on when we post this recording. And no, thank you so much again, Evan, for jumping on. I really appreciate it. I don't know, Brandy, if you have any additional things that you wanted to say before we close out.
So feel free to jump on
You there. You're
live.
very robotic. I have no idea what just happened with your audio. But
well, I'll just say thank you to both of you for building Titan AI. It's exactly what a community builder like myself needs. I mean, we spoke about the Dunbar's number, and it's really helping me because I'm right up against that thing, right? And it's so important to know what people are working on. It keeps me on the pulse.
Yeah, no, it's definitely something we've thought about the entire time with building it. And also we have our events listed on there now as well. So you can be able to see all of Evan's links and everything there as well after the recording today. So also we should probably start putting these in the QR code and showing them so people can jump on. So that's a good idea that I just had. All right, but no, thank you again for jumping on. Also in the chat, thank you, Doug, again for jumping on as well. I appreciate you. And yeah, have a good rest of your day, y'all. And happy Black History Month again.
Hey, happy Black History Month.
Happy Black History Month.